So yeah, hopefully you can see the slideshow now. So yeah, welcome everyone to another fresh Portugal webinar, this time about tax returns in Portugal 2024. With me today, Rebecca Castro and Raquel Simões, both of them very experienced tax lawyers in our tax department. I'm a tax lawyer as well. And we're going to go through how to, the whole tax returns issue and how to file, where to file, who to file with, and so on. And mainly how to classify your income. And thank you very much for joining us for this webinar, and we can just get started. But first, we like to pose a question in the beginning of the webinar. So part of this is meant to persuade you that, especially for expats, so for locals it's not the same, but especially for expats, the system is exceptionally complicated. It's not the same thing as filing a tax return in your home country where you have employment income. If you have multiple streams of income coming from overseas, especially under the NHR system, it's really complex how to classify them, and we'll get to that in a second. And can already answer this question that we really, obviously, it's as expected. We would advocate that you shouldn't be filing your own tax return. However, for fairness, if we don't manage to convince you that filing your own tax return is a terrible idea, we will send you, and in the part of what we're sending you straight after the webinar will be a video of how to use the Finanças portal so that you can go ahead and do the exact opposite of what we think you should be doing. So we will show you how to use it and encourage you very strongly not to. I think that's as fair as we can be. What are we going to cover today? So our first, a short introduction to us. Many of you have watched our previous webinar, so that we're not going to take much of your time. To do that, talk generally about the principles of expat taxation in Portugal. Most of the webinar will be dedicated to income classification, how to classify your different streams of income. Then we'll give you some examples of the sort of typical mistakes that people are doing when filing, either on their own or getting advice from 30-euro accountants that come highly recommended, as we like to see them. And then if we have some time, we will just a few screenshots from the Finanças portal and also our own MyTaxes tool, which we use to collect income details from you. And then we deal with a scenario of 2 different tax returns to file, particularly relevant for Americans, but not just. If you're British and have real estate in the UK, you also need to file a tax return, kind of similar scenarios to that. So we'll tell you what we normally do in these situations. And then there's going to be a Q&A. We expect a relatively long webinar today, so maybe less time for Q&A than normal, but we will try our best to answer as many of your questions as possible. And you can email us questions afterwards, and we will try to answer them to the best of our ability. Quick intro to Fresh Portugal. So we are the largest expat law firm in Portugal. We are now 11 full-time lawyers. Our biggest department is tax. We're 7 tax lawyers. We have multiple qualifications. We advise about 1,000 expats every year. We file over 500 expat tax returns a year. That is probably about 10 times more than any other firm. And our main mission is to make your move to Portugal from wherever it is that you're coming a success. And we're doing a lot of things apart from taxes and on that front. And this is what we're really passionate about. We want people to come to Portugal and be happy here and get along and adjust to the cultural change and so on. So this is us. Moving to the actual content. So the principles of expat taxation in Portugal. So Raquel, walk us through how tax works.
Okay, so the first thing that you do need to know is that NHR tax relief method needs to be applied every year and correctly. So it is up to you to claim the exemptions. It is up to you to qualify your income because it is a self-reporting system. and it is up to you to get the benefits that you got NHR for. So if you don't put in the correct information, the correct types of income, fill the correct boxes when it comes to NHR, you're not going to get those benefits. It's just up to you. The income does need to match existing categories, so it's important to understand that there might be certain gray areas, there might be certain types of income that are not necessarily common in Portugal. So even the tax authorities are not sure how to qualify them at times. Even us, we need to talk to each other and discuss these things because it's not always very straightforward and easy to find a matching category to a certain type of income. In what concerns the NHR, we have two different situations. So if you have foreign sourced income, it can be exempt under the NHR if it's actually taxed or maybe taxed in the country of source, depending on the provisions of the treaty. This applies, for example, to most foreign passive income. So let's say dividends, interests. On the other hand, if you're receiving, let's say, salaries, it needs effective taxation abroad to actually be exempt in Portugal. If it is from Portugal, you do need a high value added activity in order to get a special tax rate. So you get different levels of exemptions or rates.
And there is no guide.
No.
You have to know if some income, you have to know the rulings of the tax authorities on a particular matter to classify correctly.
Exactly.
And it's not on the website. You have to find it.
Yeah.
Okay, so more specifically, perhaps starting from income from U.S. companies, I think it's an important point is that U.S. companies are not just used by Americans. U.S. companies are extensively used by non-Americans, particularly LLCs. S corps can only be used by Americans, but LLC is the most common form of incorporation globally everywhere, and they are used in Portugal extensively as well. And kind of talking about American companies that people own in general, and it's a very common thing. I think, Rebecca, starting from, so there's salary and there's distributions of profit. This is normally what we see in Portugal. What are the principles for salary that you're receiving from a company? And that would normally we see from an S corp, because an LLC doesn't pay its owners a salary.
Yeah, so for salary, you always have to pay attention to where you physically do the work from. So if you do the work from Portugal, then you have to classify it as Portuguese sourced. So if you do the work outside Portugal, then it is foreign sourced.
And if it's Portuguese sourced, it's taxed in Portugal and there's no exemption.
It's taxed in Portugal, yes, of course. And you're also liable to Social Security as well. And if the job comes from a high value activity, then you can achieve the preferred 20% rate if you have an HR.
So we mainly see salaries in the context of S corps paying their own owners a salary and not in fact registering in Portugal, which creates a reporting problem because you can't really report it in any correct way. But if you have an S corp, you should be registering in Portugal, which is why we generally advise our clients to never have S corps. And then our clients go back to their US accountants who tell them, oh, but an S corp pays less Social Security. It's a great entity. And we have to remind them that the advice that they're giving their local clients in the US is not the same as the advice they should be giving to an expat client living in a different country and under a different system. So there's some correlation there. And so that is salary. And then we have distributions of profit. And what is the general rule about?
So for the distributions of profit, you have to look back to where the effective management is done. So if you have a US LLC that is effective managed from the US, then you can take foreign distributions. But if your company is effective managed from Portugal, then the distributions are liable to taxation here.
So if someone has an LLC and the LLC is incorporated in the US but fully managed from Portugal, there could be Portuguese taxation.
Yes, there could be.
Yeah. So it's a very important point because not everyone knows that, and a lot of people are reporting that incorrectly. With that, Raquel, non-US companies, pretty much the same principles, right?
Yeah, the same principle. So you need to take a look at where the work is done. That's when you know if the salary is taxed in Portugal or not. If you do the work in Portugal, it is taxed in Portugal. Of course, you have the 20% special tax rate for certain activities. And then if the work is done outside of Portugal, same thing. You can claim an exemption if it's effectively taxed abroad. When it comes to dividends, distributions from these companies, it's exactly what Rebecca was saying. So what really matters is the management. If it's considered to be in Portugal, you will be taxed in Portugal. If it's outside, you will be taxed elsewhere and not in Portugal.
Okay. Next income source. So employment income, but in this case, not from your own entity, but someone works for an overseas entity. And Rebecca, how does that work? If I work can I just come to Portugal and work for my foreign entity and not worry about taxes?
Yeah, you can't. You actually can. You don't have a good way to comply with this, because when you, as I just mentioned, if you do the work from Portugal, you have to classify your income as Portuguese source. But then when you do this, when you disclose this on your Portuguese tax return, you are also implying that you are paid by a Portuguese entity. And if you are not, you are kind of reporting incorrectly.
So the correct position is that if there is an entity paying you from overseas, that entity should register in Portugal.
Yes, correct.
And if they haven't registered in Portugal, then on your personal tax return, you really have no way to correctly report your income.
Yeah.
Which is not that pleasant to explain to clients that do want to correctly report their income. So what we say instead is that you can't be employed as a sustainable way and work from Portugal. You can't be employed for an entity. You have to either use an employer of record, which is a terrible taxation outcome, but it's compliant, or you need to be self-employed or work through a company.
Yeah.
And that is how you solve that problem. Moving to self-employment income, so not exactly the same, Raquel, right?
Yeah, it's similar in some sense, but it's very different when it comes to fixed base. So in essence, you should be taxed and pay Social Security wherever you are working. This is true for salaries, and this is true for self-employment. But the thing is that with self-employment, there's something called a fixed base that needs to be taken into account. So it's not enough to just travel for a few days to the US, work out of the US to say it is foreign sourced. You actually need to have a fixed base, which is an office, for example. It needs to be according to what the fixed base legal definition is.
So that the general principle is, again, if you work from Portugal, you're taxed in Portugal. If you work overseas, it depends, right?
Yeah.
What do you do? Is it high value, or then do you work from a fixed base? If it's all of those, then perhaps you can have no income tax, and still you'll have Social Security.
Yeah. Always.
Yeah. So that is self-employment, and we have all of these tables that they cover all the scenarios. So if you want, after the webinar, you can kind of watch each bit of income, because every slightly different scenario is a different reporting on the form, and all of this is reflected in our MyTaxes portal, where you can enter this income in a way that's in plain English and is divided to these categories, which is very much not the categories on the Finanças portal. Moving from that to a capital income, this is a very confusing term for a lot of people, because it doesn't exist in other places, and most people, they hear capital income and they think of capital gain, but in fact capital income is the opposite of capital gain. I like the tree example. So if you have a tree and you sell someone the tree, that is capital gain, but if you have a tree and the tree gives you fruit every year and they sell the fruit, that is capital income, and that is a general name for dividends, interests, and other types of distributions. LLC distributions often go there as other income, but kind of generally income that is the fruit of your capital is considered capital income, and it's one of the biggest benefits that it tends to be exempt from taxation if it comes from foreign source. But let's not forget that if it comes from a blacklisted country
without
a tax treaty, or in other words, if it comes from a blacklisted country that is not the UAE or Hong Kong, then it's taxed at 35%. But if it comes from the UAE or Hong Kong, the double tax treaty overcomes the blacklisting, and it's not taxed at all. So yeah, there's a lot of nuance in these things. Moving to royalties, Rebecca, that one's your expertise as well. So also a few types, but it's kind of same outcome, right?
Yeah. So royalties, and this is has a particular information about the source, because to apply to assess the source, you have to look back to the paying entity. And you have to classify correctly between the royalties coming from the original author and from purchase IP, because it is reported on different places on the tax return. They will be both exempt under the NHR, but has different reporting requirements.
Actually, you mentioned that royalties are assessed based on the paying entity, and it's a very important point and a very powerful opening for tax planning, because unlike employment or self-employment income, which are sourced where the work is done, royalty work is not sourced where the work is done. It's sourced where the IP is used. So imagine that you're creating content for YouTube, or doing some work that involves creating some assets that people are later watching from different destinations. In Portugal, it's very favorable for the income to come from overseas if you're under NHR, or the new scheme. And if you have that type of income, it's very tempting or natural for you to classify as business income. But in fact, if people are paying you to use your intellectual property, and you are in Portugal working from Portugal, it can still be foreign sourced income if it's royalties. So we use royalties quite extensively as a tax planning tool, and it's a really good opening and something to think about if you're producing content. Moving to income from real estate, so property attached to the ground. Raquel, how does income from real estate work?
So when it comes to income from real estate, you have to consider what it is exactly. So if you're selling your property, this is, of course, like selling a tree, a capital gain. And this will be subject to progressive tax rates if the property is located in Portugal. But if it's located abroad, the general rule is the property will be taxed wherever it is located. So if you have a property in the US, then you won't pay taxes in Portugal over that capital gain. But then again, you have other types of income that are associated with property that are not necessarily a sale, right? So you can rent out your property, and you can have even something very specific, which is alojamento local. Basically, you have different conditions. In alojamento local, you will be subject to certain standard tax rates, but it will be applied over only part of that income. So that's something very specific about AL. Then rent, for example, if you're renting out for a family to live in, it's 25%. If it's a commercial space, it's 28%. So there are different levels of taxation and tax rates that you need to consider when it comes to Portugal, to property. It's not all the same.
And capital gains and rent and AL and all of these things from foreign source are all in different places on full.
Yeah, exactly.
Yeah. Okay, next one is pension. Now, pension that's the Portuguese name, but it's actually a tricky word, because when you tell people pension, they usually think of a very narrow concept. But in fact, we're talking about any kind of retirement savings. If it's the UK, then SIP is a pension. If you're thinking of the US, then a 401k. Or an IRA or a simple, or any retirement account that you can think of is normally classified as pension. An interesting one is a Roth. A Roth is a part pension, part return of capital investment account, but there's still a pension aspect to it. So a lot of people come to Portugal expecting the Roth free taxation, no taxation of Roth to be respected, and it wouldn't be. So kind of generally about retirement accounts. Rebecca, how It's the dates that matters, right? When did you come?
Yeah. So of course, if you have Portuguese source pension, then you will be taxed under standard progressive rates. If you have pension, foreign source pension, if you have applied to an HR before March 2020, then you will be fully exempt. If you have applied to an HR after that date, then you can access a 10% flat fee on your pension income. And one very particular detail about government pension is that you have to look back to the treaty. Because, for example, if you have a US source government pension, your pension will not be taxed here. It has to be reported, but will not be taxed. And not due to NHR, but due to the provisions of the treaty. And, for example, if you have a Canadian source government pension, it will be taxed. So it depends on the treaty.
Mm-hmm.
So always have to look at the specific income stream and look at the specific treaty between Portugal and that country to know the treatment. Yeah. Right. So very, very interesting one is capital gains from securities. It's very peculiar because capital gains are actually covered by the NHR law. But the way the NHR law is structured is that it says that if the income could be taxed in the other country, may be taxed in the other country, it wouldn't be taxed in Portugal. Mm-hmm. And securities, there is generally no right for taxation to the other country. That is a normal arrangement. So anywhere apart from the US. So because the US taxes its citizens on their global income, which is a terrible pain in 99% of the cases. But in this particular case, because the US taxes its the citizens on their global income, the other country has a right of taxation. And Portugal tried to tax capital gains for securities, tried to tax Americans. In 2022, one American took them to arbitration and won. So there was no tax. The tax was abated and they got the money back with interest. To some people's surprise, not mine, but definitely some of my colleagues, in 2023, the authorities applied the exemption correctly, and Americans that have filed their tax returns have not been taxed for capital gains, apart from everyone who hasn't indicated the citizenship, because if you don't put the citizenship on the form, the authorities wouldn't know, and they would apply they wouldn't apply the exemption, and they would tax the income. And we've had a lot of refilings. I'll come back to a painful one. We have had a lot of refilings because Americans were taxed. This has been one of the most common issues with tax returns last year. Hopefully this year, not so much, but we will see. But that's the general principle. So capital gains are exempt, but just for Americans. Everyone else needs to pay. Crypto, the general rule on crypto is a new law. Went in last year. And first tax returns last year with crypto income, there used to be just no tax at all. Now you have to hold crypto directly in an exchange in a country that has a double taxation treaty with Portugal. That's the criteria for at least a year. Yeah. And if you hold the crypto for at least a year before you convert it to fiat, it wouldn't be taxed. And you can convert crypto to crypto, so you can switch to USDT, for example, and then switch to fiat. And it wouldn't be taxed as long as you held crypto for over a year. But again, pay attention to if the exchange is in the wrong place or you don't hold it for long enough, then it will be taxed, and everything has to be reported. Mm-hmm. No longer do you have this no need to report crypto income. Now, coming back to the question, our view on this is obviously, we think it's very complicated for us. So we think that filing tax returns for expats is really complicated. We don't always know the answer. Mm-hmm. Sometimes we need to do legal research. Sometimes we need to talk to our clients. We think that coming out of a jurisdiction where you've always filed taxes on your own or not at all, and assuming it would be the same when you're an expat and you have multiple countries and double taxation treaties, and a tax benefit system that looks at all of these things and assuming it will be the same thing is just missing the complexity of that particular move. It's not easy. It's really complicated, and we have rather cheekily, I know, but collected a number of specific situations. I particularly, I chuckled and I was a bit sad about this particular email that was written to us by a client who apologized after trying to do her own tax return and messed up and got a 13,000 euros tax bill and promised that she will never ever again attempt that. So filing on your own, it's really not easy. But if you are determined to have a go, at least look at Rebecca's video and good luck. And perhaps even worse is thinking that you are well represented. And I love the phrase, I used someone who comes highly recommended. These highly recommended people, they charge 30 or 50 euros to file a tax return. In the left example, which was posted on our Facebook group 2 days ago, so I thought, this is timely and relevant. Someone went to an accountant that said, the dividends from a UK company are taxable in Portugal at 20%. Oh no, maybe it's 28%. Maybe they're not taxed at all, and in fact, you don't even need to report them. And a similar example of you don't need to report some of your income on the right upper side of that slide. Now, mind you, not reporting some of your global income in Portugal is not just a civil issue; it's also a crime. So really good advice in this case, and it's not unusual. It's very common that because perhaps there's not as much enforcement as in other places, these things just go unnoticed, and it's really scary sometimes. The bottom examples, they deal with this capital gains on securities issue, and happily, almost everyone who has filed tax returns and was assessed capital gains on securities, and we have one with 130,000 euros tax bill,
that's right,
which we've managed to abate, except for one person. So it's quite, what's fascinating is that in some of the cases, or most of the cases where we've had capital gains from securities coming to us for refilings, we told people, you just need to state your citizenship and refile. And they went back to whoever filed the original tax returns, both lawyers and accountants, who refused to file again or admit any error on their part, which we find to be completely insane. So we refiled, and in almost all cases, except for one, we got the tax waived. In that one case, we have to go to arbitration because there were 4 refilings, all of them wrong. It may seem expensive to pay a little bit to get your tax return done right in the first place, but it's a lot more expensive to fix it. Later on, arbitration is like semi-litigation. We will win the arbitration. We normally do, but it will be a painful journey, completely unnecessary.
Yeah.
Because all that was needed to happen was to do it correctly in the first place. It's not that hard. We see a lot of things. Perhaps misclassifying income from LLCs is the scariest one because it's very common. It's there's lots of LLCs, lots of misclassifications, and when at some point the authorities will start cracking down on this, it won't be pretty. That is that one we see a lot. The confusing the source of income with whoever pays, and then royalties are reversed, so you have to look at it differently. Using the wrong annexes. I said royalties. Aggregating securities when you need to file them to report them one by one. Failing to report exempt income, very scary, because if it comes up in an information exchange, that is real trouble. And this is an interesting one. So failing to consider alternative taxation options. Sometimes you don't want to apply NHR because it's not worth it for you.
Yeah. Mm-hmm.
Sometimes you want to use progressive taxation because you have a better outcome. 20% is not always less than the rate that you would pay. So you always have to look at all options. So I really need to do this in a competent fashion. Won't go into detail with this. This is just a general look of how the portal looks like. So there is the face of face is the translation, right? So the face is your kind of general information, your tax number, dependent information, bank details, things like that, and then there's an annex for each type of income. There's one annex for all foreign types of income, and then another annex for NHR where you kind of repeat the same thing and refer back to your different streams of income. And this is our portal where we use to aggregate information from clients that uses the more commonly used. You have an income from an LLC or an S corp or a UK company or a Canadian company or from royalties or from crypto and whatever, and this is very easy to understand. And then we take that and we convert it into after we advise you on how to classify correctly, we convert it and we fill in the Finanças one by ourselves. And this is just another screenshot of how it looks. A point on multiple filings, different tax returns. We have a pretty well established process by now. Our general, so it's mostly relevant to either Americans or people who have income from other countries. The problem is that Portugal doesn't assess the tax for foreign sourced income. They would for local income, but not for foreign sourced income. And the calculation is extremely complicated, extremely complicated. So normally you would want to wait until August where you actually get your tax assessment so that you can apply credits correctly. And therefore, if we are expecting Portuguese tax if not everything is exempt, and we're expecting Portuguese tax for our clients, we try to get as close as we can by April 15, and help people pay estimated taxes in the US if it's the US by April 15, but request extensions if we are waiting for an actual tax assessment for credit purposes. If we don't wait for, if there's no Portuguese tax expected, then we can file on time. This is kind of our general process, and it works very well. Some people don't like to request extensions, and they prefer to file early, but we sort of have to explain that if you have a credit, you really want to know what the exact amount is. And then some people don't want to claim credit, but some people take the exclusion. But so we divide people to these two rough groups. If you really need the accurate information from Portugal, then we try and give you the best alternative and file late. And if not, then we file on time. So this is kind of how we normally work. And so if you wanted to do your tax, I mean, if we've convinced you that this is tough and complicated and we can do a better job in filing it, I'm going to activate that offer now so that you should be able to see a red dot that has just appeared on the offer icon on the right side of the screen. And we will get to Q&A in a second, but this would give you the option to book your tax return with us. I think I will say so that we do either Portugal or we work closely with a consultant to do US as well. So we can do Portugal and the US if you need the US. So that's from us. But surely you have some questions, and I think we can head over to the Q&A and answer some questions, and starting from the top. And if you guys want any specific question, if you have an HR but have some income covered by the progressive tax brackets, can you use deductions? Who wants that? You want?
I can. So this is a pretty common question that we receive a lot, actually. So the thing with deductions is you can use deductions on income that is subject to progressive tax rates. So it's perfectly possible to have an HR status and to even use it on certain types of income and then not use it on others because the NHR isn't just applicable to them. And then you get deductions over the income that is not subject to the NHR. So yes, you can use deductions with NHR, you just can't use deductions to deduct from 0 or even the 20% special tax rate.
There are actually two nuances that I wanted to bring up on this. One is that if you do have tax to pay, some of the income that's exempt by NHR is exempt from taxation, but is counted towards your other tax bracket.
Yeah.
So if you could end up in a higher tax bracket, I mean, for example, capital gains from a sale of a home. I mean, yeah, it's not relevant because it's under NHR. No, it is relevant. Mm-hmm. It's relevant if you have income that's subject to tax because it raises you to a higher, probably the highest tax bracket. So there is some relevance. So this is kind of one nuance. Another nuance is that you need to be careful with sticking your NIF everywhere, which is very common. Raquel does it all the time.
I do.
Everywhere. I mean, you can't go to a restaurant with Raquel because there'll be a very long process at the end of Raquel obtaining NIF for herself and everyone else who doesn't want it. But some people, there is a point of place of management of companies. So, for example, if you use a company and you want to argue that this company is managed overseas, and you spend some of your time in Portugal and some of your time overseas, then you really don't want your NIF on every receipt on 3-day differences, because that kind of undermines the whole argument that you're living overseas and this is information available to the tax authority. So that's a kind of an interesting nuance. So yeah, hello from Marbella. I don't think that's a question, but so hi. Does Portugal allow tax loss carry forwards on stocks, and if so, for how long? So,
yes, it does.
It does.
For 5 years, and it's important to know that you have to aggregate this to use those. So and you can only offset the same type of tax applied to the same income. So yeah, you can.
You can, but you need to tick the aggregation box, which people don't normally do. Yeah. So you need to. I mean, you need to know that you need to carry these losses forward and report it in the manner that carries them forward correctly, which people don't usually do. How to file crypto? It is part of the tax return. So there is a new place on the tax return to report crypto income. Right. Okay, this is a long one from Daniel. August 2024, we posted a Facebook video addressing changes to capital gains tax treatment for NHR members. Can you confirm if the handling of capital gains from foreign stock sales has evolved since the pivotal? Well, I think, it must have been posted before we talked about that. So yes, it has evolved, and indeed it's been respected now by the tax authority, which is very nice. But some people are not taking advantage because they're making a mistake in their tax return. A lot of people. Okay, so if I bought a house, Vito's asking, if I bought a house in 2019 and attained my residency in December 2024, would I still be able to apply for NHR? Tax residency, yes, you can. You have 2.5 months to go. So you can, but you have until the end of March to do that. Bernard, they still have to file a return if I'm retired and have not earned any income since coming to Portugal. Who wants to answer that?
Yeah, so this is a tricky one because I feel like not everyone agrees. Personally, I would say yes, because you need to report your bank accounts either way.
To disclose that.
Yeah, I think so. I know that some colleagues disagree and feel like this doesn't need to be reported as long as there's no income.
They are wrong.
Yeah.
I mean, there is clearly a reporting requirement. It's just not such a big deal if you had no income.
Right.
And you fail to file a report just for banks, but you should file just for banks.
That's our policy.
I mean, when you say that you've earned no income, I'm just mindful that when we're also talking about no income from retirement accounts as well, or are you talking about earned income?
Yeah, maybe he means that no work income.
Right. So any income, if you have any income, then you definitely need to report it from any source. It's not just earned income. So can you clarify how US ISAs are taxed in Portugal? Are capital gains taxed only when a share or fund is sold? Dividends taxed on receipt? And are premium bonds taxed at the 28% or scale rates. Okay, yeah, good question. So ISAs are like sort of UK tax efficient investment accounts. They are in a cap. So it's a little bit like a fund, right? I mean, so if you have the ISA and the money aggregates within the ISA, whether it's dividends or capital gains, but until you actually gain access to the money, and you either sell it or distribute it, it's still within the fund, so it's not income. If you get the money out, then it is income. If the ISA distributes dividends and you take it or you can't take it, then it's also income. So we need to see whether you actually have access to that money. In either event, obviously Portugal doesn't respect the tax treatment of the ISAs from the UK. It is income and it is taxed. Then any kind of capital gains is normally taxed. If it's a long-term capital gain, it's taxed at 28%. If it's less than a year, it's taxed at progressive rates. And even if it's long-term and it's taxed at 28%, you could choose to have it taxed at progressive rates. Is the income from K1s, which would be profit, taxed at 10% in Portugal? Who wants to answer that?
Go ahead. Well, yeah. So the 10% flat rate is usually destined to pension income. So I don't see how income from profit reported on a K1 can access the 10%.
Yeah. I mean, unless there's just unless you have an IRA that sends you a K1.
Well, yeah.
I don't believe that's possible.
Yeah.
So once my NHR gets approved, still in deferido, if I'm still not living in Portugal yet, have gained my income abroad for many years, but I am Portuguese, do I have to pay taxes in Portugal?
Yes.
Okay, this is
bad news.
This is terrible, right? This is not a good case.
Yeah.
So if you applied for NHR, I mean, what has probably happened is that there's some record of her being in Portugal, right?
Maybe she has like a Portuguese address on citizen card, even though not living here.
Yeah, it's a common case.
Yeah.
So here's the problem. If you are not living in Portugal, you weren't supposed to apply for NHR. It's a status for tax residents, and you do need to show that you are living in Portugal and that you haven't lived in Portugal for the last 5 years. So if that is the case, and you have some historical address that needs to be changed retroactively to reflect where you actually lived, then you should eventually get it approved, and it should be fine. But if you're not living in Portugal now, not good. Then you have stated that you live in Portugal so that you can apply to NHR in the first place. Then you will be taxed on your worldwide income, even if you're not in fact living in Portugal. And if you want to change that and argue that you're not living in Portugal, you're going against your own declaration. It's possible, with a good legal opinion and a very good narrative, but it's a careful argument to make. And I would argue that whoever got you into indeferido in the first place was perhaps not the right person to get you out of this situation.
Yeah, and it's important to clarify that indeferido doesn't mean pending. It's been rejected.
What should have happened is that whoever applied for you in the first place should have asked you about this and then changed retroactively your situation before applying. That would have been the right thing to do. Are there any tax implications of gifting cash to my daughter who is an EU citizen not living in Portugal? The funds are not in Portugal. No, not in Portugal, right? No issues. If she was to bring the money into Portugal, still no issues because she is your daughter.
Exactly.
But if she wasn't your daughter, then there would have been tax. Is it for individual or corporate business tax return? So this is for we're talking about individual tax returns now. Okay. Which category would be income from stock lending? Do you understand the meaning?
Well, I've seen this on crypto.
Well, it sounds like crypto, right? Yeah. But it's not specifying.
Well, it can from the top of my head, I think it can be self-employment income, but it has to be analyzed.
It's not clear.
It's not clear.
It's not clear. Sorry, we don't have. Approved for NHR last year. Do I need to reapply every year? No, but you need to apply NHR to your income when you file your tax return.
Yeah.
So note the difference. You need to use it, but you don't need to reapply.
It's an option.
In fact, and this is something that's come up recently, if you leave Portugal and you come back, you still have NHR. It keeps running. So you don't lose it when you leave Portugal.
And doesn't pause also.
Doesn't pause also, yes. So it keeps you keep losing time, but you're not losing the status. Does one have to get a certificate from Finanças to receive the benefits of the tax treaty?
Sometimes you do. Yeah.
Depends on what, where and what stream of income, etc. What happens to inheritance money received from outside Portugal? They need to declare this to the tax authority, and secondly, is it taxable with or without NHR? So it depends on inheritance from whom, and whether it comes into Portugal or not. If it's completely outside of Portugal, then you don't need to declare it and it's not taxed. That's normally the rule. If it does come into Portugal, inheritance from direct lines, so parent or grandparent, is not taxable. Everything else, it's taxable as a sort of a gift, right? As a transfer.
So NHR doesn't apply to it.
NHR is irrelevant.
Yeah, that's right.
Is the USA or any specific US state is a blacklisted country? No, it's not. Being a US citizen, should I file first in the US or Portugal? I think we answered that, right?
Yeah, we did.
Distributions from a USA, IRA, or 401k considered capital income? I think we answered that as well. No.
Maybe we should comment on the lump sum.
Ruling. Yeah, makes sense.
Yeah, so when you have Finanças issued a ruling saying that if you take a lump sum, then from a retirement arrangement, it can be considered capital income and not pension. So maybe that is the only option that reflecting on being capital income.
Okay. Normally it's pension.
Yeah.
So is the year 2020 correct?
For the pensions.
I thought NHR changed in 2024. The year 2020 is correct. It's a different change. There's been a number of changes in 2020. One of them is raising the pension amount from 0% to 10%. Another one is a very small change in the list of applicable professions, high value activity. There's actually been 2 lists of high value activities circulating that were issued in 2 or 3 months difference between them. One of them is correct and the other one is not. One is more up to date. So if transactions are inside a Roth IRA or 401k, but we're not taking any distribution, should those transactions be reported? If the answer is yes, well, the answer is no. So the answer is no, but as I'm sure you know, starting the age of 73, you will have to start taking minimum distributions, or you will be badly penalized in the US. So once you start taking them, you need to report them. As long as they are within the accounts, they are not income, and you don't need to report them. My partner and I are dual US EU, entered Portugal as EU citizens from the US. How does that impact our taxation schedule? Ireland and Poland, well, I mean, anywhere outside the Ireland is complicated. I mean, I don't know if you've entered from Ireland. I don't think Poland has any issues. But yeah, US obviously citizenship-based taxation. If you lived in Ireland before you lived in Portugal, this is mine because I'm also qualified in Ireland. Ireland adds another layer of complexity, which is a nasty concept called ordinarily resident. So Ireland doesn't fully release you from taxation for the first 3 years. It only partially releases you. So if you are both American and have lived in Ireland, you will be chased by both authorities.
Amazing.
So, which makes it even more interesting. Let's take a couple of more. My partner and I are dual US-EU. Very good questions, by the way. Very, very detailed. A dual US-EU, and
This was the
it's the same one. Oh, sorry. So 0% for American capital gains, ? Even if not on NHR and regardless of short or long term? No. Yeah, not if not on NHR, only on NHR.
Yeah, exactly.
This is an NHR benefit. Oh, by the way, on the new scheme as well. So, NHR has been replaced by a scheme that we call TISRI, Tax Incentive for Science, Research and Innovation. The Portuguese acronym is IFISI, and everyone calls it NHR 2.0. It also exempts capital gain. And in this case, it exempts capital gains for everyone. So the new scheme is actually better than NHR for capital gains. But without capital gain, without this progressive taxation for short-term capital gains and 28% for long-term. So pretty terrible. What if you're a US citizen by birth and then become a Portuguese citizen? What if? What do you mean, what if? Then congratulations. I don't know. It
doesn't impact your taxation. That's what you're asking.
Okay.
Well, there's only one scenario where this is relevant.
You gave up
taxation. No, that's not
the government pension.
The government pension.
Oh, yeah.
That's it. There's one scenario. So U.S. government pension as in like pension for people who worked for the government, is not taxed in Portugal unless you are a Portuguese citizen. That is
That's
the
very
only.
specific.
That is the only impact. Do you have to pay capital gains tax? I mean, okay, the questions are deteriorating. I mean, yes, if you have capital gains that are taxable.
It's also from Tim.
Yeah, come on, Tim. Give us something better than this. Yeah, you do if you have taxable capital gains, you need to pay the tax. Let's take a last one. So, Rosario, I applied for NHR in 2024. So I have an official residence, still waiting. I live in the US still, I have dual citizenship. Do I have to pay for securities or for 401k? Okay, 401 gains would, if they're still within the 401k, then it's not income, so you don't need to pay. Securities, capital gains, yes, you do, because you have you can't say that you're a resident and a non-resident at the same time. You have to choose. You're either saying that you are a tax resident in Portugal, in which case you're taxable on your global income and you can fight the fight for your NHR and try and get it, and you should if you have a good lawyer. Or you're saying that you don't live in Portugal, in which case you're not entitled to any tax status and you don't need to file tax returns in Portugal, but then you need to change your address back to the US, and you will not be able to apply to NHR because it's over. So these are your options. I think we will conclude at this because we're approaching an hour, and it is very long and very technical. So with that, I think we would like to thank everyone for joining us to this not easy webinar, but I think very important one. Really hope that those between you who are not already working with us hope to work with you in that tax season and the next ones. And if you don't work with us, then we really hope that we won't find you, we won't get you in a different channel, and everything will go smoothly. And please do use our resources to educate yourselves as much as possible. And we wish you all the very, very, very best. And I won't conclude before thanking both of you for joining us. And very, very much Raquel and Rebecca for this very insightful webinar. So hopefully the weather will continue to be sunny and fantastic. And we wish you all a wonderful rest of the week.